Good morning. It's Tuesday, March 15th. I'm Tom Elliott and this is my market report. Well, global markets have been in turmoil ever since the earthquake and subsequent tsunami hit Japan late last week. The Australian stock market has now fallen 5 straight days in a row, so March is shaping up to a very bad month for equity markets. Of course, the damage in our market was nothing like what we saw in the Nikkei yesterday, which at one stage fell 7% intraday. Now, a lot of questions being asked as to whether can the Japanese economy ultimately pull out of this. Critics of the Japanese government, I guess, or skeptics might be a better word, have pointed out that debt is already 200% of GDP and that the Japanese government simply won't be able to borrow any more money to rebuild the devastated regions. Other people say no, that Japan has been through this sort of thing before, most recently Kobe in 1995, just 16 years ago, that rebuilding did occur, and in the longer run that was actually quite good for the Japanese economy then. Still, we will see. On the local market, well, uranium stocks have been absolutely hammered and are still falling. Obviously, the future of the global nuclear power industry is now in some doubt. We've got 3 reactors in Japan with some serious problems, one of them particularly so, and hardly an hour goes by without some sort of fresh report of an explosion and a potential meltdown there. Uranium stocks like Extract Resources, ERA, Paladin, for example, have all been hit very hard, down between 15 and 20% since pre the earthquake. Insurance stocks have also taken a bit of a beating. Insurance Australia Group is lower today, as is QBE. Now, even though these companies probably don't have any direct exposure to Japan, the cost of global reinsurance will rise even further. It was already going to be up because of the floods in Queensland and Victoria, the earthquake in Christchurch in New Zealand, and now the devastating earthquake and tsunami, of course, in Japan. That will ultimately mean that all of us will end up paying higher insurance premiums, which is a way, it's almost like a stabilising mechanism that insurance companies have. Some people are starting to say, contrarians you might say, are looking at oil and gas. Now the view is if nuclear power, which currently generates almost a third of Japan's electricity, has to be put on the back burner for some time, then maybe this will increase the demand for coal and gas, and to a lesser extent oil, for the generation of electricity. And this runs against what the global environmental movement wants to do, but it may be that a place like Japan has absolutely no choice. So look out for stocks like Woodside, Santos, Oil Search, those sorts of ones. There's a distinct possibility, some people say, that they could be beneficiaries in the long run of this disaster. The gold price is stronger, but it's sort of been over $1,400 an ounce for some time. Interestingly, and perhaps in a way contrary to what I just said about oil, the oil price is steady at around about 101 to 101.50 US a barrel. Of course, recently oil has been much more affected by what's happening in Libya. So there's lots and lots of reasons to be nervous about stocks. I don't think the outlook for the Australian economy is bad, although it has to be remembered that Japan is a major customer of Australian iron ore, coal, etc. China, however, I think is still going to press forward. But anyway, the world has become more nervous. That's reflected in the stock market going down. We'll see where we are again this time next week.